Guys, I'm here in the gold district in Istanbul, Turkey. Why is gold so popular in Turkey? Obviously because of their problems with inflation. Right now, short-term interest rates in Turkey are 50% a year. And just 2 years ago, $1 would only buy you about 18 Turkish lira. Now it buys you about 34 Turkish lira. So basically, the value of the currency has been cut in half in just 2 years. So to help preserve the purchasing power of the work that a Turkish citizen does today, so that it doesn't get cut in half in a year or two, they buy a lot of real things like gold, bullion, real estate, and maybe to a lesser extent, stocks. What some people don't realize is that the stock markets in countries that have high inflation do well nominally, but when you account for the decrease in value of the currency, they kind of don't move that much or stay the same. So in Turkey's case, the stock market is up about 3 times since 2022. So why is inflation up so much in the last 2 years? Some of the same reasons that it is up in other countries like the US, but also one reason that President Erdogan himself admitted to. So right before Erdogan was elected for the second time in May of 2023, he actually said that interest rates are directly correlated to inflation, meaning you raise interest rates, you raise inflation. You lower interest rates, you lower inflation. So what did he do? He lowered interest rates. And what happened? Inflation jumped a whole lot. And he said, please follow me in the aftermath of the elections, and you will see that inflation will be going down along with interest rates. Well, I don't know if anybody has asked him about that since, or he did a mea culpa. Usually people in the government, when they screw up, they never admit it, but the damage is done, and recently they had to raise interest rates up to 50% a year. Now, why do you care? You're in the US, we don't have those same kind of problems yet. Yes, we are still the world reserve currency for now, so we can export some of our inflation to other countries. When we print money, Turkey cannot do that, but we have some of the same kind of ideas floating around in the government. Just recently, we had Senator Warren saying that they need to put price controls to stop inflation and all this nonsense, like really second grade kind of stuff. Instead of putting controls on the printing press, they think that the whole reason for inflation is because of greedy food manufacturers and nonsense like that. Of course, some of the other crazy ideas include the idea of taxing unrealized capital gains. So if your stock is up 100% and you don't sell it, government wants to have you send them a check for the amount of gains you have on paper. Do they send you a check if the stock goes down afterwards? Probably not. So the government's answer to everything is printing more money, lowering interest rates to get asset prices higher, and that's exactly what they're already talking about that the Fed wants to do, to lower interest rates by 1/4 point, maybe 1/2 point in September. And you even have so-called establishment economists that are the experts that recently was clamoring for an emergency 3/4 point rate cut when the NASDAQ opened down 5 or 6% because of the problems in Japan. And after the market recovered in a few days, we said, oh, never mind about that 3/4 point rate cut. So these are the people that are the experts that we're supposed to listen to. So inflation is barely down. It's still hovering around 3%. And yet they want to lower interest rates to maybe help a certain political candidate or help Wall Street because they own the majority of the stocks and other assets that will increase if the dollar decreases. So when the top 1% own 40-something% of the stocks, they really don't care if the price of milk doubles or eggs double or bread doubles, because their stocks go up by billions of dollars. So think of it like this: if you had a fireplace and you put a log on the fire and started burning it, that's inflation. And if the flame is 2 feet high, let's say that's 2% a year inflation. That's the target rate. So when the Fed started printing money during COVID, they were basically putting more logs on the fire and got the flame really high to 8 or 9%. And then they said, hey, these flames are too high, we're gonna have to take some logs off, basically raising interest rates to put a damper on the economy. And now the flame is 3 feet high instead of the target 2 feet high, and they're already clamoring, saying, hey, look, we need to put some logs back on, or even put gasoline on the fire. That'll work too. So remember, all currencies always go to zero eventually, even the US dollar, which has already lost 98% of its value since the creation of the Federal Reserve in 1913. So are we going to have Turkish-like crazy inflation of 100% in 2 years or something? Most likely not, but that doesn't mean that we will not be accelerating our inflation rate, especially since we have $34 trillion in debt and we are spending $2 trillion more than we bring in taxes every year right now. So what can you do to help protect yourself from your money becoming more and more worthless? Take a cue from some of the Turks and start buying things like gold, silver, real estate, and even stocks to an extent. And when I think about it, nothing seems to take down the stock market, maybe because a good portion of that is people's thinking that, hey, I might as well put my money somewhere and I'll put it in stocks, because leaving it in cash is still a loser's game, even at 5% interest rates. Because we all know that the official inflation numbers are also cooked. So guys, don't fall for these childish ideas of freezing prices, taxing people on unrealized gains, and other kinds of tricks, because they will result how they always result: empty shelves, black market in goods and services. And since they know everybody has a short memory and they like to blame the results on other things, they will never admit that they were wrong or it's their fault. It's always somebody else's fault. So guys, prepare accordingly. We are not out of the woods by any means with our debt, and if we keep going in the direction we're going, we may end up something along the lines of a country like Turkey or other high inflation countries. I hope you like this video, guys, and I'll see you in the next one. Thanks for watching.